What's an average year in the stock market? Because an average return doesn't actually look like an average year. Since 1926, the stock market has returned on average 10% per year. But that doesn't mean that every year the market actually returns 10% a year. So let's look at the numbers and see how we actually get to that number. Over that time frame, the market was actually up 73% of the time. And when the market was up, the average return was 21%. So that means on the average down year, the market was down 13%. Let's take the last 3 years, for example. In 2022, the market was down 18%. In 2023, the market came back up 26%, and it's up again about 20 or 21% through September of 2024. That averages out to 10.5% over the last 3 years. This chart here is a perfect example of how often the market actually returns within 5% of its average. Since 1926, you can see only 12.2% of annual returns have been within 5% of the average return over that span. I say it all the time, but that's why it's incredibly important not to get caught up in the day-to-day or yearly returns of the market and focus on the long term.